Move it to this, right?
Yeah.
So
Would you
we
like to-
are ready to start when you are.
I say we call this meeting of the City of Geneva Industrial Development Agency Audit Committee to order.
That was a lot of words. Good.
I'm impressed with myself.
Cool. So the first order of business is to review the draft audit, which Michael is here to do with us. So if it pleases you, I'll just turn it over to you.
Perfect. Thank you, Tracy.
All right,
Michael.
great. So, with financial statements for the IDA, I find it's easiest to just go through the whole statement and try to put together a summary or anything like that. It's relatively short. So we can flip through to talk about the important things. And then we'll get on with everything. So first of all, when you open up, you get to the auditor's opinion. And the opinion in there is a disclaimer of opinion, which is what it's been for the last few years. I will say this year for 2022, it's really just related to the fixed assets in the EDC, the capital assets, not some of the accounting records issues that there has been for the last couple of years. So it's a step in the right direction. But due to the significance of the numbers that are included in here for those assets, it'll continue to be a disclaimer until, hopefully there can be some steps taken to come up with a fair value, possibly, the actual cost for the building, and then putting together a list of any other actual property and equipment outside of that building. So that being said, that's a step in the right direction because it is just that one item now. Unfortunately, based on the value of that item, it continues to be a disclaimer of opinion. So that's the audit opinion. If you get to page 3 is a statement of net position for the IDA. And on here, you can see a couple of things I want to point out. The lease receivables under current assets and under non-current assets. And then near the bottom of the page, there's a line that says deferred inflow of resources. They net out, so it's not affecting that position, but that's a result of GASB 87. There's a new accounting standard this year that requires the recognition of any long-term leases. So this is also an item that's related to the EDC and the fact that they have some tenants with lease agreements that go out for another 12 years or so. So that's what those items are related to that you don't see in 2021 because that was a new accounting standard implemented for 2022. And again, they kind of net each other out. So it's not affecting the net position, but they are new items that you can see there. You may get asked about those items. And then one of the other things, to highlight here, the due to other governments, you can see increased pretty significantly this year from 106,000 to 195,000. And that's really related to the portion of the tower sale that the park partnership held on to continue, financing operations and things like that. So that's why that increase was there. But overall, you can see there was an increase in the net position, the unrestricted net position of about $200,000. So that's a pretty positive thing operationally that, an increase in that position means you didn't lose any money, or the overall, the agency didn't lose money. There's operations were picking back up, after the pandemic. So that's, my main points on the statement of net position. If you flip over to the next page is the income statement, essentially. And there you can see, revenues, total operating revenues combined were up to 621,000 from 287 in the previous year, due largely to a big increase in the rent at the EDC, and then the administration fees on the Lakes Edge project that the IDA brought in. Down in the operating expenses, you'll see a big decrease in the professional fees. And that large number in the prior year was really related to the final payments on the former management companies. So those were some pretty large fees in the prior year that weren't there this year. And then just to highlight in the miscellaneous expense and the non-operating revenues and expenses, that $125,000 really represents a distribution of the investment that the city of Geneva and the Ontario County IDA had in the park partnership. Some of their initial investment has been paid back, so that's what that represents there. So total increase of $90,000 this year. That's good news. I don't have any comments really on the statement of cash flows. This is just required by accounting standards. So you can see the operations and investing activities. But ultimately, cash was up $350,000 this year. So then we get into the footnotes, and the first couple of pages are really just information about the entity. Talks about the EDC and the park partnership being presented combined with the IDA. And then there's some boilerplate information about accounting policies and different accounts that that show up on the statement of net position. And then some changes, some accounting standards that were implemented this year, and then other ones that will be implemented in the coming years that have been issued by GASB. Again, all very standard language. At the top of page 10, you will see a note on the change in accounting principles. That's just talking about the implementation of GASB 87. Got a mistake there. That should say September 30th on that line. You'll see the same thing on the top of the next page with that. So I'll get that updated. But then at the top of page 11, you'll see again that lease receivable and then a schedule of how that breaks down for those future rent payments that are coming into the EDC, or that will be coming into the EDC. Out through 2025. And then, the capital assets, this is what I was talking about. These numbers carried over from the previous auditors that also had a disclaimer because they couldn't get good details of these numbers. So they haven't changed the last couple of years. We've just rolled forward depreciation a little bit. But you can see it's reporting, just over $3 million in total assets. So that's where we get to that significant importance of those numbers. The next page at the beginning, this shows, the detail of the money that's sitting in the park partnership that's really due back to the city and the county IDA as the results of operations in that park partnership over the 35 years. Since it was created, that cash is sitting there that's due to those other organizations that are in there. The bottom of that page, the note payable, that relates to the mortgage on the EDC property. So just some information on that. And then again, on the next page, there's some details about the future payments that are due on that property. So, that's a really quick overview of the operations, kind of how the footnotes are set up and the information that's in there. And then the next few pages after that show that information broken out amongst the IDA, the park partnership, and the EDC in more detail. So, I didn't really have much that I wanted, that I noted on those combining schedules. I think you guys are pretty aware of what's going on. On a day-to-day basis with the entities, so I didn't have anything to add, but I don't know if anybody had any questions. I know it sounds like you didn't see them previously, so I don't wanna, I don't wanna, you know, rush at all. If you want to take a few minutes to have, look at it and ask any questions. Oh, it looks like we have a question. The note.
The government on page 12.
Yep.
I'm just trying to understand the accounting of it, and so we paid out a good amount of money
Yes.
last fiscal year. And I guess I'm just curious as to how the due to other governments went up after paying a bunch of money.
Because essentially those the proceeds from that sale, the tower sale, the partnership distributed, I think $511,000 or somewhere around there. But that distribution really was just all of this part of the proceeds of the sale. It didn't distribute anything previously, so it didn't, you know, pay out any of those previous amounts that were due, because the way that the partnership agreement is set up, you know, any surpluses are distributed amongst the three entities based on the percentages in that agreement. So if you think about it, the total sale was for 622,000 or somewhere, or 611. Okay. Okay. Right. So that full amount that the partnership received for the sale would be dispersed based on the percentages in the agreement.
Mm-hmm.
However, the partnership held on to $1,000 to provide for cash flow and things. So 85% of that $100,000 is due to the city and the county IDA based on that.
So you're talking about the amount that we kept in the fund?
Yes.
Right, okay. So you have to show that
So
of that amount, 85%, the two other entities are owed their distribution, so to speak.
Right.
Their portion. Their portion, okay.
Their portion.
So it should theoretically add up to the cash.
Yeah, so if you look, if you look on page 14, and this is, I'm gonna do my best to make this make sense through explanation in your heads, but you'll see in the industrial park column, essentially the park has $230,000 in cash. And then there's also $66,000. That's the remaining value of the book value of the properties that are still in the park. To get to the total assets of 295 is right. And this is where we've talked about, we've kept things consistent with the way they were recorded in the past. I would have preferred to set things up a different way if I was at the beginning of the accounting, but that's okay. So really, if you look at it, the cash, because that 66,000 would actually come out of the unrestricted fund balance to begin with, and then you'll record the sale. So 14.71% of the cash is about $35,000, which is what the unrestricted fund balance less the land held for investment is. If you follow that. At all. So it's a little tricky, and like I said, I'm gonna try to do it through explanation. I could probably make some doodles.
Measure set up that the higher investments when get paid out for this person. Bummer.
Yeah, and that's kind of what I was talking with you about, you know, in the long run, because the way it's set up is it talks about, you know, it kind of talks about operating surpluses and deficits. And I think that over time, the partnership's actually gotten a little bit away from sticking to the letter of the agreement and kind of just gone to, because it hasn't needed additional contributions, because it talks in the agreement about how to fund deficits and then what happens with surpluses. But there hasn't been any deficits in a number of years because it's really just been collecting the tower rental fees and things like that. So it's kind of just gotten to 14.71% for the Geneva IDA, and then the applicable percentages for the other ones.
So is it fair to just look at this due to government list as like a payable and more as a, like, just kind of telling us what belongs to who?
Yes.
What is everything that's still in there, what belongs to who?
Yes, I think that's a fair way to put it, is like, if you were to, you know, end the partnership, you owe this much cash to the city, this much cash to the county IDA. And then however the remaining assets will be distributed.
We were just talking about what happens after the emergency sale, when the rest of the land in the partnership is not necessarily sellable or developable. Where does the partnership go from here? So that's something to start thinking about. Cool. Okay. Thank you for answering my question.
Yeah, that was a doozy. So after those combining schedules, you know, there's just a informational section on some of the leases that the IDA has that don't really have any financial activity that shows up in the books. It's more for other purposes, but there are agreements out there. And then there is a back opinion, a second opinion related to compliance and internal controls. Because it's a governmental audit report, and this is required. So we do have two findings in there. The first one, again, is related to the capital assets. If you flip to the, 2 pages, there's a schedule of findings and question costs. So this basically is just talking about those capital asset records being a material weakness resulting in that disclaimer of opinion. And then a compliance finding related to the submission of the annual audit report. Being that I'm only here in June, unfortunately, I apologize. That's partially my fault. And then partially, you know, we were working through some difficult things. Transaction related to the sale of the tower and the implementation of the new lease standard. So that's reported. And then there's one final report that basically just says that the IDA isn't doing anything that's not in compliance with your investment policy. I know, I think you were starting to look at the investment policy. I thought it got brought up last year at the meeting, but I could be confusing that with somebody else. It's a very basic investment policy that the IDA has, but that's what that final internal audit or independent auditors report is related to.
I don't know what we updated this year.
So any questions on the financial statements?
Yeah, that's pretty straightforward. Tracy, is it on our radar to be working on the capital asset portion? I mean, I know we're doing a whole committee thing with the EDC anyways, but. Is it,
So I started to dig into it last year, and it became a really big project, and nobody has any documentation.
I was gonna say, so we literally don't have,
And a lot of the documentation got lost in their management transitions.
okay, okay.
So, I mean. Sorry, our building is falling apart. The line is, no, to be, so a lot of that documentation has been, like, I can't tie certain things to actual documentation.
Sure.
If we were to get an appraisal at some point, maybe that would help. Would that help?
It would, you know, for the building, because you can get a fair market value, and I think part of it. That I would, you know, possibly, that I think that possibly Webster Properties could do is outside of the building itself, what assets are there and come up with a list. Or what improvements, and again, they've only been there for, you know, 2 years. What improvements have been made, you know, some of those costs could probably be tracked down, but it's probably going to require some sort of appraisal to get a good fair market value of the building at some point in time, just to have a starting point.
Because I was able to track down a few, or at least pinpoint what they were for and when they happened. But I can only go back.
Sure.
So.
Is this stuff that Massa would have or pre-Massa?
Probably both. I have the information about the HVAC thing that we did. That's one.
So the other document that I provided is the management letter, just communication. Both items we talked about in the findings and the back opinion there, so it's just about the fixed assets and the report submission, but we're required to have multiple communications. So we don't have to spend any time on that. But I will say we did also have an item in this one that we said, you know, we did note significant improvement in the completeness and timeliness of monthly oversight activities, which, like I mentioned in the disclaimer of opinion, was just pretty much just the fixed assets this year, whereas last year it also related to some recording of transactions and things like that. So I mean, that's a pat on the back, some improvement this year, and hopefully, you know, that continues. I think for 2023, I think the overall books, the QuickBooks, are in a much cleaner starting point from 22 than they've been. So I said this last year, but I really think that probably the 2023 report will be filed within the 90 days. I don't see any reason not to, unless something catastrophic happens in the next few months.
Year ends in what, four months?
Yeah.
Right?
Yep.
Yeah, we'd all like to get to that point where we're within the 90 days, you know, obviously it's with the transitions, et cetera, over the years, and the difficulty of getting the information. It's been tough for quite some time, and it's definitely something I think we would all be looking forward to, is
Yeah, it's
getting
always,
a schedule and not being, you know.
it's always hard because you feel like you're in the middle, you know, you try to, like with Massa, get the stuff in, we need this, but nothing happens if that other party kind of delays and drags their feet too,
Well,
so.
and that's kudos to Tracy that things are
Yeah.
better this year, because that's all you. So
And I
thank
think-
you for that.
And I think Webster has it.
They had to clean up, they had to clean up.
You could have just let it ride.
So we need to get this out of the state. Over him, losing our.
Mhm.
So is it possible to, so I know there's a letter that needs to get signed once it's approved.
So we we have a rep letter that we have to give to you. But we are just waiting on our response from Harris Beach, and then we'll send you that letter. And then as soon as you get that back to us, we can finalize it. And they heard from them last week, so I anticipate that. Kind of thought maybe it would be there by today, but I'd imagine we'll have it by the end of this week, so that won't be a problem. Unless you guys, come up with any other changes other than those tops of those 2 pages that need to say September instead of December.
December, yeah.
So then we just, on our side, we have to bring this in front of the full
Friday
agency and then, okay.
Yeah, it's on the agenda for this Friday.
So the Friday, we can approve it, right?
Yeah,
And so then it's just that paperwork there that has to be taken care of, which doesn't involve the whole committee.
Correct.
And then that can be filed before the
Yeah.
end of, before the 30th.
I believe the board has already approved all the rest of the Paris reporting, we did that in advance, so that as soon as we have the audit done, I can go ahead and file, so. There won't be any.
Are you signing the rep letter, or are you signing the rep letter? I think you did last year.
We want to be the treasurer.
It's a little bit different. Typically, it would be, an executive director or
But I don't know,
treasurer. So we'll put your name on it.
Okay.
Okay.
Great.
Sounds good.
All right. Well, thank you very much for your time.
Thank you. Yeah.
So who do you work for the state then? Is that-
No, I work for MMB, Mendel
Oh.
Metzger Bar and Company.
Okay, gotcha.
We're just independent
Okay.
auditors.
Gotcha. Very good.
I guess we should cover that.
Oh, yeah.
Yeah, no, it's- So you're the people that will actually submit this to the state, right?
No, we'll send it in
Okay.
Tracy.
All right.
We'll submit
Gotcha.
it.
But this is all their work.
Yeah, all the, gotcha, yeah,
Here.
and that's,
In
right.
case you need to get a hold of me.
Okay, thanks.
All right, thank you very much. Perfect.
Okay,
Thank
Thank
you.
you very much.
thanks very
Have a
much.
good rest of the
Take
day.
care, Mike.
Appreciate it, Michael.
And I will follow up with you by the end of the week on the goals that we talked about.
Okay, sounds good. Thank you. Speaking of which. We have quotes from auditors, and since we were meeting anyways, I figured I would bring them to you. Yes,
What a bummer.
I think the cost of audit services has gone up across the board for all organizations. This is gonna be standard in the market right now. Auditing has become a much bigger or a much bigger project than it used to be. And also, I know audit firms are having a hard time staying staffed up.
Mhm.
So anyway, so this is, these are the quotes that we got. I apologize, the last one came in, it got stuck in our email filter. But we dug it out, Alex sent it out for me, and so I added it on. The MMB was a low bid for the IDA. They were a little bit higher for the LDC, but this morning the LDC, or this afternoon, the LDC did approve to continue working with MMB. Assuming, that under contract, we won't have some of the same timing issues. But they were also surprised that they have like 12 transactions a year. But so much of an audit now, it's like across the board, it doesn't even matter how many transactions you have, there's like a baseline amount of work that is just time consuming.
Yeah, and maybe if they feel like they're getting paid for their time, maybe we'll get better attention.
So.
What have we been paying now? For the city, for the share of it, or,
No, we've been paying them directly.
oh, we have,
Yep. So far this year, we paid $5,000, and I expect another another invoice of between 5 and 7. So probably in line with
14.
what we're looking at, so probably something like 13 or a little under 13 for 2022. But I don't really know because we don't have a contract, and that's why we need to do this. So this is, EFPR is not much higher. Bonadeo is, by reputation, I know that they're very precise and thorough and very on it. They do good work.
Yeah, but that I can't,
Yeah,
I can't.
yeah, and that one's, so like,
Yeah.
I know some of the IDAs that have more complex situations. You know, a firm like them, it's good to make sure that they stay on track and don't get themselves in trouble.
Sure.
But they are quite a bit higher than the other ones that we received, and
Yeah, a little bit.
all of the firms have a lot of experience. The scopes are generally the same. So. We'll be back. And
Well, MMB, the thing is, they've been involved,
Yeah.
they know the situation,
Yeah.
obviously.
They know what they're
Whereas-
into.
NIGO or EFPR, they'd have to start from scratch.
Do you remember who the firm was before MMB came on board?
Free Maxic
Yeah.
was doing it beforehand.
Yes.
They kind of dropped off with Geneva, they backed out as opposed to us, or as opposed to the IDA and LBC in the city, like doing an RFP or whatever, like Free Maxic made that decision to. I don't know if they did it across the board with all of their public clients or what, I don't know what the deal was, but.
Who's the county used, do you know?
They use it, and they've been very happy, as far as I know.
Well, I mean, I don't know, I've always said if it ain't broke, don't fix it, but.
Okay. So yeah, I mean, obviously there's a planning concern, but I think in our contract, we have a contract that's saying, look, we said, this is what you promised to deliver to us, and.
Yeah.
So I think that also puts us in a better place where you kind of push the governance on.
I would tend to,
Yeah,
MMB,
yeah, me too.
you know.
I would say,
but they're
no,
not-
both groups don't need to use the same, it's a little bit easier on staff if it's the same.
Sure.
But there's no savings because they have it, you know.
Yeah.
Like there might be a little bit of a benefit if they were both on the same fiscal year, but even now, like there's not a lot of site visits happening with audits, a lot of it's done remotely, so you can start to use that benefit, so. But yeah, so. This group doesn't necessarily need to make a decision, the board will have to vote on this, but it would be good to have, you know, a recommendation going into the meeting.
Yeah, I
Are
agree.
you looking at a vote on Friday or, oh, you are, okay,
Yep.
okay, yeah. Yeah, I think recommendation
Yeah.
should be MMB.
I agree.
I agree with that.
Cool. Sounds good.
I don't see any, probably much resistance too much on the board for that. On money, but what are you gonna do?
Yeah, well, you said this year we'll be paying about a little under, you're guessing 13,000 anyway, right? I mean, you're looking at the same, I mean, with everything else going up, I'm surprised that it's gonna be about the same with the same company. You know, I guess that's the good news out of it.
Yep.
This is
Agree.
this is the market right now.
Mhm.
Yeah, I mean,
I
that's what it is.
don't think it's gonna get better.
Yep.
That's the other benefit of locking it in for 3 years. is
Yeah.
you've got-
Yeah.
You're a little bit, whatever might happen over the next 3 years, you're a little bit
Insulated.
separated from it,
Yeah,
and you have time to plan for that. So, you know, if there's a major accounting change, it's not impossible for someone to a firm to come back and say, look, there's this huge change, it takes us an extra 8 hours, like we need to talk about fee. But a lot, my experience with auditors is generally they do their best to stay within the cost structure that they provided. And or minimize any increases. For those types of reasons, generally they know a few years after it's get changed, so they try to build that. But it's not impossible, but you do get shielded from that a little bit.
so the LDC kept that, thinking it'd be also better for us too, right, instead of jumping to. EFBR.
Yeah, I thought that was interesting that there were different low bids for the two groups, but they're pretty close.
Right.
They're pretty close, so I think that they saw value in staying.
Staying with the same,
Rather than bouncing twice in a few years.
yeah. Yeah, sounds good.
Yeah, I mean,
So someone just has to remember to do this again in 3 years.
Yep. Somebody.
Cool,
No,
All right, Tracy.
that is all I have for today.
Okay.
Is there anything else?
Well, I say let's adjourn.
Cool.
See you guys in a couple days.
Yep. Friday.
Friday.
It's gonna be live and Zoom.
Yes, we just need to make sure that we have enough people. Are you planning on coming in person?